Welcome to Matters Financial, Geopolitical from the Frontier. I apologise for my absence, but I had some visitors from Palo Alto, and I spent 3 days off my desk in my 8th floor redoubt, and for that I apologise, but we're back. Firstly, if you missed Paul Kagame's conversation with the Kenya Chamber, which we filmed, please take a look. A lot of insights into that. KCB released their full year results this morning, and I went to that results release, and then I did an interview with Joshua. I'll come to those results in the morning, but I'll give you a photograph from the 8th floor, which not mine but his, which is in the CBD in Nairobi, and you can see the photograph of the KICC. We will publish our interview with Joshua imminently, hopefully as early as this evening. Home thoughts turned to Usain Bolt, who said goals are all about action. Goals turn dreams into reality. I thought that was rather good. The little one said to her mum and myself, "Can I sleep in your bed?" And I looked at her mum, and she knew I was so happy. She was grown so tall. Political reflections: the only dependable prediction for the outcome of the UK's May 7 election is this: chaos. If the polls are right, it'll be a total mess, said Rob Ford, a politics lecturer at Manchester University. Every single vote in Parliament is going to need constant wheedling to get it over the line. You could be having regular confidence votes with games of brinkmanship on both sides. Surveys from the most prolific polling company YouGov over the past week have shown Cameron's Conservatives and Labour neck and neck at support levels between 32 and 34%. UK Independence Party at about 15%. The Liberal Democrats at 8%. That's really been a big tumble. And the Greens a point or so behind. There's been little change in that overall picture in the past few months. So that's interesting to consider, especially with regard to sterling. Cameron, I put up a photograph of him speaking during the British Chamber of Commerce's annual conference in London on February the 10th. Stratfor put out a very interesting decade forecast. The world has been restructuring itself since 2008, when Russia invaded Georgia and the subprime financial crisis struck. 3 patterns have emerged. First, the European Union entered a crisis that it could not solve, and that has increased in intensity. We predict that the European Union will never return to its previous unity, and if it survives, it will operate in a more limited and fragmented way in the next decade. We do not expect the free trade zone to continue to operate without increasing protectionism. And this is an interesting prediction. We expect Germany to suffer severe economic reversals in the next decade, and Poland to increase its regional power as a result. I disagree with that. And in fact, this sort of limping Europe is very supportive because it keeps the currency very low, and that's very supportive for German industry. The current confrontation with Russia over Ukraine will remain a centerpiece of the international system over the next few years. But we do not think the Russian Federation can exist in its current form for the entire decade. My word. Overwhelming dependence on energy exports, unreliability of expectations on pricing make it impossible for Moscow to sustain its institutional relations across the wide swathe of the Russian Federation. We expect Moscow's authority to weaken substantially, leading to the formal and informal fragmentation of Russia. That's a very bold call. Saying period of decline of the nation states created by Europe in North Africa and the Middle East is accelerating. I've spoken about that previously. Power is no longer held by the state in many countries, having devolved to armed factions that can neither defeat others nor be defeated. That's interesting. China has completed its cycle as a high-growth, low-wage country and has entered a new phase that is the new normal. Will continue to be a major economic force, but will not be the dynamic engine of global growth it once was. They're predicting that that role will be taken by a new group of highly dispersed countries we call the post-China 16, which includes much of Southeast Asia, East Africa, parts of Latin America. And they reckon China will not be an aggressive military force either. I don't think that's likely under Xi Jinping. Japan remains the most likely contender for the dominant position in East Asia, both because of its geography and because of its needs as a massive importer. US will continue to be the major economic, political and military power in the world, but will be less engaged than in the past. It will be a disorderly world, I called it an arrhythmic world. With the changing of the guard in many regions, the one constant will be the continued and maturing power of the US, a power that will be much less visible and will be utilized far less in the next decade. Extremely interesting view. I disagree with some of it. I think very alarmist about Russia. I think misreading China's military ambition. Talking about Turkey playing a central role. Saying we expect the instability in the Arab world to continue through the decade. We also expect Turkey to be drawn to the south in as much as its fears of fighting so close to its border, and the political outcomes of that fighting will compel it to get involved. It will intervene as little as possible and as slowly as possible, but it will intervene, and its intervention will eventually increase in size and breadth. Whatever its reluctance, Turkey cannot withstand years of chaos across its border. There will be no other country to carry the burden. Iran is not in a position geographically or militarily to perform this function, nor is Saudi Arabia. Well, Saudi Arabia isn't, because it's structurally so surreal, isn't it? However, Iran, I think that's an interesting call that I disagree with. Talking about post-China manufacturing hubs, international capitalism requires a low-wage, high-growth region for high rewards on risk capital. In the 1880s, it was the United States, for example. China was the most recent region replacing Japan. No one country can replace China, but we have noted 16 countries with a total population of 1.5 billion people where entry-level manufacturing has gone after leaving China. The map of these countries shows that they are concentrated in the Indian Ocean basin, and by this point, as I've said, the glory days, in my view, of the Indian Ocean are set to return, and I've said that severally. Another way to look at it is that these are the less developed countries or regions in Asia, East Africa and Latin America. Our forecast is that in this next decade, many of these countries, and perhaps some not identified, will collectively take on the role that China had in the 1980s. I think they're right on that score. Moving on, Ian Bremmer, Putin, full war with Ukraine unlikely, half war with Ukraine well underway. It's called ambiguous warfare, I suppose. Kiev has done a defense deal with the UAE on unspecified military and tech cooperation. That's an interesting combination. Saudi Arabia, according to the Times of Israel, would let Israeli jets use their airspace to attack Iran. Riyadh's only condition is that Israel makes some kind of progress in peace talks with the Palestinians, Channel 2 reported Tuesday. The Saudi authorities are completely coordinated with Israel on all matters related to Iran, the European official in Brussels said. Jerusalem and Riyadh do not have diplomatic ties. And I wrote about this in October 2013 when I said, if the Pax Americana in the Middle East were a three-legged stool with the US as the most important leg, then Israel and Saudi Arabia are the other two sides of that leg. I said Hussein and Hassan are going to have to cut through a great deal of interference in this situation. There are powerful vested interests fully invested in the status quo. Bibi Netanyahu, classic example. If the Pax Americana in the Middle East were a three-legged stool with the US as the most important leg, then Israel and Saudi Arabia are the two other legs of that stool. Neither Riyadh nor Tel Aviv are aligned with President Obama's Iranian rapprochement. Remarks by the European Union's Foreign Policy Chief Federica Mogherini at the Chatham House, London on Tuesday to the effect that a nuclear deal with Iran is at hand. And that's interesting. And then I like this tweet from Rami Al-Loa. Iranian Navy destroyed and sink a mock-up model of USA aircraft carrier Nimitz during large drills in the Gulf. That was yesterday. Susan Rice described Netanyahu's visit as destructive for US-Israeli ties until 2017. I like this image from the Gateway Pundit of a missile which reads, "To be personally delivered to Obama." The article is about the old reset, and it's touching on those points. John Kerry said, "We made progress," as he bade farewell to members of the American delegation at the table with Iran. So I think there's a lot of traction there. The fact that Netanyahu is prepared to go over the head of the president to go to Congress to make his points is of itself a signal at how close this deal really is. From global research, it's this what's going on behind the scenes which is oh so important, but we cannot be privy to it. We can, however, put enough data points together to see that financial, economic and currency war has already begun. That was a bit of a theme in my Mindspeak presentation. I'll put up the link for that presentation. I covered Charlie Hebdo, oil war for Africa, Obama, Putin, King Dollar. King Abdullah of Jordan was meeting with King Salman bin Abdulaziz of Saudi Arabia. This is off Twitter. Zaid Benjamin tweeted a photograph of Bashar al-Assad, who's proven very sticky. The Guardian is saying paradise jihadis, Maldives sees surge in young Muslims leaving for Syria. Foreign Policy says in King Salman's new Saudi Arabia, it's in with the old. Business on Bloomberg posted the 20 fastest growing economies of 2015 ranked. Kenya is right up there. Investors who held their nerve with Greece reap world's best bond returns. About double the second best, which was Denmark. Euro around 113.53. Dollar index 94.24. Japanese yen 118.73, Swissy 0.9455, pound 155.34. I think structurally one's got to be short the pound running into this election. Aussie 0.7886, Indian rupee 61.875, South Korean 110.95.99. The higher beta currencies have had a bit of a bounce. Rial 287.49, Egyptian pound 762.75, South African rand, good example, 11.3683. That's strengthened off areas of around 11.75. Dollar index, I'll put up a 3-month chart. We're in a churning period. I expect us to turn higher again. Traders prior to Tuesday's testimony saw a 51% chance the Fed will raise the benchmark rate from 0 to 1/4 by its September meeting. That's up from 44% a month ago, but probably eased off in the last 2 sessions. Euro dollar, my target remains 1. German 7-year bond yields fell below 0 for the first time ever on Thursday. Can you believe that? Crude oil, I'll put up a 1-month chart, $50.70 last time I looked. Ali Naim, he came to the rescue as he did on the same time last week. It's quite interesting that he does it ahead of the core data that comes out weekly about the amount of supply that's in storage. But I think he's pushing on a string. I'll put up an image of him. Gold last at 1214.635. I think it's going back to 1,000. And the only commodity to have fallen more than oil, you're not going to believe it, is the price of lean hogs. A term referring to butchered pigs, regardless of paunch, has sunk 51.3% since the end of June. In Russia, in Moscow, the average vacancy rate for the highest quality office space in the city climbed to 29% at the end of 2014 from 18% a year earlier. Coming to sub-Saharan Africa, Angola plans to borrow $10 billion in additional external debt this year, including issuing a debut $1.5 billion Eurobond, as Africa's second largest crude exporter battles with falling oil prices. Hoping to get a $1 billion credit line from the World Bank and borrow billions more from China. South African all-share ticked marginally off an all-time high, remains up 6.76% year-to-date in what has been a real fast start to 2015. Tax rate in South Africa was increased by 1 percentage point. Fuel levies and duties on property sales will also rise. Nene lowered his forecast for economic growth to 2% from 2.5%. GDP expanded an anemic 1.5% last year. But however, we saw a bit of a pickup in the fourth quarter, and I think that's sort of what's going to support the South African economy. Is not much different to what's supporting Kenya, which is the oil price related stimulus. Dollar rand 11.3783. It's been ticking higher. The rand Egyptian pound 7.6326. Egyptian stock market, the EGX30 up 5.06% in 2015, off 2015 highs, but up substantially. Nigeria all share down 12.85% year to date, but has rallied for 8 sessions through this morning, where I think it's turning lower. Ghana has reached an agreement with the IMF on a $1 billion aid deal. You will recall how President Mahama was at one time saying that he had a homegrown solution, and I said there isn't one. So I'm glad he's bitten the bullet and dealt with the situation at hand, and Ghana bonds are back at par, I think. KCB reported full year profit after tax. I went to the morning earnings release, we filmed that. I did an interview with Joshua, we'll post that imminently. Full year profit after tax up 17.484%. Now look at this, full year total assets up 25.45% to 490.33 billion. That's up about 100 billion shillings, which is a pretty enormous amount. Loan loss provision was uplifted to 5.058 billion from 2.905 billion previously. Full year staff costs at 13.993 billion versus 13.469 billion, so the good attention to costs. Profit before tax up 18.2%. After tax up 17.484%. Earnings per share up 16.804%. Dividend unchanged. They're looking to conserve their cash. Lots we learned. Customer numbers up 65%. Agency outlets up 66%. NPLs reduced significantly. Cost to income at 50.2%. So basically, very, very strong results. Big bet on growth. That's what Joshua was about. A few tweets from the session. The future is mobile and agency banking. We do not live in the past. We live in the present. If you're going to dream big, dream big. I'll put up a photograph of him that I took after the interview. He was wearing some very bright socks, which he called his happy socks. Loans up 25%, total assets up 100 billion shillings, and says we do not lack pipeline. 11 million transactions on mobile. There was some great data. Basically, for me, the expansion 5.45% expansion in total assets is a headline grabber, signals the nature of the offensive game in 2014. Great set of results. Expenses held down, staff costs barely higher year on year. The minimum price target is 66 near term, once the disappointment with the unchanged dividend wears off. And there was a little bit of disappointment, but it's not going to last. My year-end price target is now 90. CFC Stanbic reported full year profit after tax accelerated 10.9125%. By contrast, it's really interesting. Their loans and advances declined by 2.539%. Full year profit before tax up 6.59%. After tax up 10.9125%. Full year EPS up 10.8712%. And actually, funnily enough, yesterday I met Greg as I was walking out of the office, and he mentioned that South Sudan, which was a big earnings machine in 2013, was a drag on earnings, and I can understand that looking at those numbers. Karachi Breweries plans expansion and a bourse listing. The company at the end of March will open a new plant, increase its output volume to 110 million litres of beer a year from 10 million litres, and EABL share price has actually turned low after this news, but I think that's overcooked. I spoke about the fuel stimulus, which I think is going to make a material impact this year. Nairobi All Share up 8.98% through this morning at a fresh record high. NSE20 up 6.96% at a 207 high. Like this tweet from Pauline Mungi, how beautiful Nairobi was before the day of the Hilton. That's where I was at this morning. This was a commercial bus station. A catch-22 in Kenya. Western terrorism alerts may fuel terrorism. This is Jeffrey Gettleman. Every morning at the Tides Inn, a waiter trudges down from the restaurant to the beach with a huge blackboard advertising the daily specials. Deep fried fish, masala prawns, pepper steak and pizza, all listed in chalk and illustrated with cute drawings. But nobody ever comes by, not even for a gander. Up and down the Kenyan coast, it is the same picture. Tables sit empty, dance floors are deserted, crates of Tusker beer collect dust. The fabled white sand beaches along Kenya's perch on the Indian Ocean have become ghost towns with palm trees. It's the worst time anyone can remember, said Dhiren Shah, the Tide Inn's owner. Kenya's coastal tourism is collapsing, and big part of the reason Kenyan officials say is Western travel warnings issued after a round of violence last summer in a remote coastal area. The American warning is perhaps the strictest, barring embassy personnel from setting foot anywhere on the coast unless special permission is granted. It also warns tourists of possible suicide operations, bombings, to include car bombings, kidnappings, attacks on civil aviation, and attacks on maritime vessels in or near Kenyan ports. On a recent afternoon, Mr. Kazungu zeroed in on a heavy-set Mzungu strolling down the beach, who shook his head at Mr. Kazungu's offers and then whirled around violently, jerking both his hands up, palms out as if to say, "Stop it." Mr. Kazungu walked away dejected. "No Mzungu, no money," he said. He then disappeared down a soft, white, deserted strip of sand that almost anywhere else would have qualified as paradise. I wrote about this at the end of the year. Tourism, I said, needs a calm 2015 to register a rebound. The tourism sector needs a 12-month period of calm before it can recover. Places that depend on tourism, for example, are particularly susceptible to perceived instability. Nassim Taleb, in one of the recent editions of Foreign Policy, keywords are perceived instability. It's all about the perception. We live in a 24-hour world. I've yet to see the plan which bends the perception curve. Put up a photograph scene of Mombasa Island, seen from English Point. That was this recent Christmas, and the previous Christmas, Boxing Day, I took a photograph of the same sort of area, but from a slightly different spot. I'll put that up as well. The value of land in 9 of the fastest growing suburbs of Nairobi has grown 5-fold since December 2007, a new report shows. Average value per acre rose from 32.5 million in December 2007 to 173.7 million in December 2014, according to the Hass Composite Land Index. Henry Rotich on Wednesday said that the Treasury, the KRA and the brokers had agreed that the task of accounting for the tax be left to investors, not to the market intermediaries. And I said this on the 23rd of February when I said, now, and I stand to be corrected, there is nowhere in the world that I know of where stockbrokers collect CGT. Nearly every jurisdiction I can think of is a CGT regime where the individual or the corporation files their own CGT returns. So I was saying the operationalization of this CGT tax was designed to fail. And so there is no harm in taking a step back and revisiting how we can better implement the tax. Lao Tzu put it best: men are born soft and supple. Dead, they are stiff and hard. Plants are born tender and pliant. Dead, they are brittle and dry. Thus, whoever is stiff and inflexible is a disciple of death. Whoever is soft and yielding is a disciple of life. The hard and the stiff will be broken. The soft and the supple will prevail. And that's what I was saying. I was saying the point I'm making is that flogging a dead horse, which I'm glad they're not now, starts to denude our bona fides. This is the 21st century. We can continuously calibrate our position, and we must, because the world is complex and fluid. Glad to be back. Thank you so much.